We have not been in a silver rally at all for 2024. We've had a little bit of a bump here in this little pathetic candle. We have a long way to go in a minor commodity rally, which includes gold and silver. Now, this is why mining stocks, when gold and silver rally relative to other commodities, that's when mining stocks really outperform, meaning when people go after gold and silver, but not other commodities because they're worried about the money, that's when the metals really start to move and commodities don't go up as much, or maybe they even go down relative to gold and silver.
Investing Haven predicts that silver will rise to $34.70 in 2024. They note that all leading indicators are bullish. The price of gold, the euro, inverse correlation to the US dollar, inflation expectations, and futures market positioning. Rafi Farber, the endgame investor's visionary mind, believes that the silver rally in 2024 has yet to materialize. Despite a minor uptick in silver prices, he predicts a significant journey. Silver has rallied more than 10% this week, seeing its best performance since November. At the same time, the gold-silver ratio has fallen below 85 points, its lowest level so far this year. According to some analysts, anyone who has missed the gold rally should be paying attention to silver right now. Farber further explains that genuine rallies occur when investors prioritize gold and silver over other commodities, driven by concerns about economic stability or currency devaluation. Farber commences his argument with substantiating evidence and delves into the Gold-to-Commodity Research Bureau ratio. Highlighting its consistent trend, he observes that the ratio has exhibited stability throughout 2024. According to Goldman Sachs, the macroeconomic backdrop for commodities in 2024 is looking more bullish than ever before, ultimately indicating that we could be on the verge of another blockbuster year. However, Farber predicts mining stocks will shine by prioritizing gold and silver over other commodities. Expect miners to follow the price of gold and silver, which have suddenly become hot commodities in 2024. However, that could reverse if the Fed feels inflation is under control, or investors find better prospects elsewhere. Now, we present the clips of Rafi Farber's insights from his recent video with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Let's get into why exactly there really has been no gold rally, even though it feels like there is. And I don't mean to be negative. I mean to be positive by saying that, because I mean to say that the gold and silver rally are still ahead of us, and this is really nothing. What this is a commodity rally, and here's the proof. This is the gold to the CRB ratio. The CRB is one of the oldest commodity indexes. We've had it since, I don't know, the 50s, 60s, 70s, one of those things. So we see here that we are at a major pivot point in the gold to CRB index, and we've only really climbed significantly above this ratio one time in the 2020 crisis, which is when gold was at its all-time high in real terms relative to other commodities. So we were at this level actually at the peak of the 2016 rally, not even at the peak of the 2016 rally, the beginning of the 2016 rally, when gold blasted out of its 4-year bear market here, in nominal terms, at least in dollar terms. And we were at this same level in early 2020 before the lockdowns. And we were also at it here at the end of 2023. And we've been at these levels for all of 2024, basically. And we haven't broken above it yet. So what this is really a commodity rally. And I'll show you more evidence of that in a second. There has been no silver rally either. I've put these convenient little labels here of what a silver rally looks like in real terms. And this has a lot to do with gold and silver miners, and I'll get to that in a second. So from April 2019 to April 2020, that was a huge silver rally in real terms, meaning silver was outperforming other commodities because people were worried about monetary disasters. And we had here a major high in July of 2020 with silver really outperforming other commodities. And then from about July 2020 until July 2022, for 2 years, we had a major silver decline from 0.2 to about 0.06. That's a huge silver decline. And from there, since 2023, we've been pretty stable. It has not moved. We have not been in a silver rally at all for 2024. We've had a little bit of a bump here in this little pathetic candle. We have a long way to go. What we are in right now is a commodity rally. This is the CRB index. This was a major low in the CRB index at April 2020 during the lockdowns at 100. And we reached a high of 325 or 330 or whatever that is up there in 2022. And since then, The CRB has pretty much been going sideways until recently. We made a new high at about 295, very close to 300. So we've been in a minor commodity rally, which includes gold and silver. Now, this is why mining stocks are not rallying so much. People have been asking me, why aren't the mining stocks really participating in this rally? And some of them are, and they have risen, but not really significantly. If you look over a 5-year period, it's not really that impressive, but it's going to become impressive when this ratio changes, when it actually goes up. So if we're going back here, the reason that mining stocks have not rallied so much is that if all commodities are rallying, then miner profits don't rise much or at all. If mining companies have to pay more to mine the silver or the gold out of the ground, then their profit margins won't go that much higher and the stocks won't perform that well. When gold and silver rally relative to other commodities, that's when mining stocks really outperform, meaning when people go after gold and silver, but not other commodities because they're worried about the money, that's when the metals really start to move and commodities don't go up as much, or maybe they even go down relative to gold and silver. And that's when the profit margins really start to move and gold mining stocks really outperform well.
During the interview, Rafi Farber anticipates challenges for the repo market's surging volume. He envisions a future where the Federal Reserve is forced to return rates to zero, driven by a shrinking money supply. While the repo market is generally stable, there have been some problematic periods. For example, in September 2019, the overnight repo rate spiked significantly, up to nearly 10%, and the available cash in the market plummeted. Farber concludes with a bold prediction, stating his belief that gold and silver will continue to rise, ultimately reaching new all-time highs as the dollar loses its value and the intrinsic value of precious metals as money becomes increasingly apparent. Let's get back to video.
You see a black line and a blue line. Black line is the amount of volume in the repo market. We see here we hit an all-time high of $2.023 trillion on March 31st, 2024 on the quarter turn, which was expected. And here we have the security overnight financing rate, which is the repo rate, what banks charge each other to borrow and lend cash overnight. Here was the apocalypse over here. And we see, what do we see here? We see that the volume in the repo market does not go down until and unless the Fed cuts rates. And these are the, basically the Fed rate, the repo rate is the overnight rate, more or less. It's not exactly the same, but it's pretty similar. So we see here that the repo volume, right, it reached a fever pitch over here, which was a record in 2019, right before the apocalypse. Then the Fed started cutting rates after the apocalypse, and that only then did volume fall in the repo market, and it started rising again because they kept rates steady here, and it hit a fever pitch over here, and then they cut rates again to zero, and this was the lockdown crisis, etc. And then the volume stayed pretty steady as rates stayed at zero, but then they started raising rates, and then the repo volume started to spike. But the problem is the money supply is still shrinking. So this repo volume can't be sustained for much longer because dollars are running out, and there aren't as many dollars in the system now as there were back here. So we're going to hit a brick wall over here. And when we do, they're going to have to cut down to zero in order to get this volume down because the dollars don't exist to sustain it. And from there, I'm going to go to an article from Jared Blickery, the only guy I trust on Yahoo Finance. Why the Fed is wading into uncharted waters. Morning brief, a little bit of a correction on that. The Fed waded into uncharted waters in 2008. So they've been in uncharted waters for what, 16 years now, something like that. So Jared Blickery says down here, and this is what I wanted to highlight, Powell's big headache right now is an economy that reaccelerates, meaning price inflation. That's what he's talking about, requiring further rate hikes. This is the so-called no landing scenario, right? Not hard landing, not soft landing. This is the no landing scenario. An economy that ran too hot and stayed there was the fate of Paul Volcker, who led the Fed in the late 1970s and early 1980s, which is when gold and silver made their moonshot. Volcker presided over a double dip recession as he tamped down inflation that at one point spiked to 15% annually. It would be supremely ironic, actually, it would be pretty likely, if the same fate befell Powell, forcing another round of uncountable rate hikes, just as rate cuts are on the horizon. Now, there's two things I wanted to emphasize here, is that first of all, rate hikes will make price inflation even worse because they will come at the expense of the Fed's earnings. And I've already showed you that when earnings get negative, real interest rates don't impact gold and silver prices, and gold and silver keep going up anyway. Second thing I want to mention is that Paul Volcker could theoretically and did get control of the situation because the debt was in principle payable back in 1979 and 1980. Now it is not. So there is no way that they can hike rates. Hiking rates will bring gold and silver even higher. And so the only move the Fed has from here is to go back to zero when the next financial crisis hits, which, in my opinion, though I could be wrong, will happen this year when the plumbing hits a wall. The spot gold to CRB index ratio going back all the way to 1980. How gold, I couldn't find the one for silver, but I found the one for gold, how gold was performing relative to other commodities. The higher this line is, the better gold and silver are performing relative to other commodities. So at 1980, we were at this line at about, what is it, 3.0, let's just say. It almost hit this cross line at 3.0. So where are we now? We're at the same level. So gold and silver relative to other commodities is at the same level as it was at the peak of the bull market in 1980. Doesn't that freak you out? It's very surprising, but it is true, and it shows once again that gold and silver are money, that they've been outperforming commodities, especially since 2008 when the real inflationary engine started over here, and they've been going up and up and up and up, trending. And we had a big spike over here from the lockdowns, of course, and this was the big retracement, but we're on our way up again. And we're going to go to new all-time highs and higher as the dollar dies and as gold and silver are revealed as money even to the layman.
The next big surge in gold has started, and sub-$2,000 pricing may be a thing of the past. Gold miners are silly cheap and should play catch-up in the coming months or years. Silver juniors must hold $10.60 to confirm the recent breakout. As discussed in the video, what key factors or events should investors closely monitor to assess the trajectory of gold and silver prices, particularly in light of macroeconomic trends and monetary policy decisions? Drop your thoughts in the comment section below. If you find this video informative, remember to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.